Hello, it's Robert Miner with Dynamic Traders Group with this week's trade strategies setups for the week beginning March 9th for our Twitter, YouTube, and Traders News subscribers. This is just a very brief section of the full video that I did for our subscribers. This section that I've cut out for the Twitter and YouTube and Traders News is just for one market setup based on dual time frame momentum setups. And it's data right up to date through this past Friday. So it's a setup that's probably going to occur early this week. And there were several other markets that we took a look at to teach our subscribers a little bit more about the specific trade strategy. So if you're interested in this, and if you're interested in trade tutorials every week, along with our analysis and recommended trade strategy setups that are occurring in many of the financial markets and a few commodity markets, check out our reports at dynamictraders.com. There is a 1-month trial available for first-time subscribers. Okay, let's get at it and see if we can learn a little bit about dual time frame momentum setups and specific trade strategies with our multiple time frame setups. Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategy tutorial for our DT Report subscribers and our DT software owners. What we're going to talk about this week is using dual time frame momentum trade setups and how they can indicate strength and weakness in a market, and also they can signal a specific trade strategy. So as usual, I'm going to be taking a look at a couple of markets with data right up to date so we can develop a specific trade strategy primarily based on the momentum positions. So let's get started. Well, this is gold weekly data, the June contract. And I'm recording this Friday morning, so this last weekly bar is not quite complete yet, but we'll assume that however it finishes up today, it's not going to make any dramatic difference, and probably certainly not any difference in the momentum position. So we look at the weekly data and we look at the weekly momentum. The weekly momentum, the 8, is bearish and it's not oversold. So the assumption would typically be that the market's going to continue bearish, in this case at least, probably for another 2 to 3 weeks. That would be the typical length of time before it completed a bearish momentum cycle, just based on it's still bearish and it's not oversold yet. So we're going to look primarily at the momentum positions and without too much consideration for the pattern position or price position or whatever, the other technicals within the market. Certainly anybody could argue with me, and they certainly have in many emails over the last week or two or so, that this is not an irregular correction. It's not an A and a B as I have labeled here. So, and that could be correct. I could be wrong about that. But I'm not wrong about the direction and trend of the weekly momentum, because that's just a technical. So we're going to trade on what we know right now. So we're oriented towards the short side and getting short, looking to identify opportunities with a high probability outcome on the short side. So let's go down and take a look at the daily data. So this is the daily data, and our ideal dual time frame momentum setups are when at least 2 time frames of momentum are in the same direction. So for instance, if we have the weekly momentums are bearish, and then we make a bear reversal in the daily momentum, that's a dual time frame setup to continue the bearish trend. So we don't just blindly want to, and every time we have a reversal in the shorter time frame like dailies, enter the market, but that would be a condition that would be set up to then initiate a specific entry strategy. So in this case, because the daily or the weekly momentum is bearish, we're looking for bearish reversals in the daily momentum for a setup on the short side when both the daily and the weekly momentums are bearish. And again, this is somewhat irregardless of the pattern position, price position, and some other technical features. So let's take it. This again is the gold daily data. Let's take a look at this, because the position of price relative to the momentum can often indicate if a market's relatively strong or weak, regardless of the trend direction of the momentum trend. So here's daily gold off of the April 14th high. We had a decline, and then we've been essentially sideways for about 3 weeks now. And so we haven't gone anywhere. So we made a bull reversal in the daily momentum, just was up a couple of days, and then sideways to down. We made the bear reversal. We made another bull reversal in the daily momentum. And what's happened since this last bull reversal about 5 or 6 trading days ago? Well, the market's been marginally or slightly bullish. As I usually say when we make the reversals, the momentum reversals, I would say, and the market should be sideways to up for at least 3 to 5 days. You know, a typical bull or bear cycle momentum is around 3 to 5 days. It could go much longer than that, but that's kind of the minimum we look at for 3 or 4 days in the opposite direction till it gets either overbought or makes a reversal. So let's take a look at this. If we've had a momentum reversal and the market has not been able to exceed the price high from the last, in this case, momentum bear reversal, well, that indicates a weak market. Basically indicates the market's been sideways during this momentum cycle. So here's how we look at this, is that number one, if we made, no matter where price is when we made a momentum bear reversal, we should look at this market as the potential for a short trade. Now, we may have some technical feature that overrides that. Maybe there's some clearly bullish pattern, Elliott wave pattern. Maybe we've clearly, for instance, we've made a new high, new closing high above this April high. Well, that would certainly, we would want to maybe be hesitant about going short if we broken out of that high, even with the weekly momentum's bearish. But what if we make a daily momentum, a bear reversal, and we have not traded above or closed above the high from where the last daily momentum bear reversal was made? Well, that really indicates a weak market. So there's nothing for sure in any kind of technical analysis and any kind of trade strategies, but that would indicate the market wasn't in a bullish type of cycle to where it was making higher highs and higher lows as it was making its reversals in the daily momentum. So it would really indicate a weak market. So for instance, in this case, if we were to make a daily momentum bear reversal, and the gold market had not closed above 1745.40 or traded above 1764.20 intraday or closed above the closing high, that would be really weak because we have fairly reliable reversals in the daily momentums. Usually mean we get a price reversal, at least for a few days, or at least it goes sideways. The upward, in other words, the upward trend in price stops and it goes sideways, and then typically it actually goes net bearish. So this would be a total no-brainer setup to identify a very specific short trade strategy if we make a daily momentum bear reversal and gold is not closed above the closing high from where the last daily momentum bear reversal is made or traded above the high at the last daily momentum bear reversal. So usually what I do, if that occurs, is just I want the market to do something to indicate that it has made a reversal. And usually I'll say if let's say we make this daily momentum bear reversal price is not closed above 1745.40, I would then say it's a go short setup. A specific go short setup on a lower daily close. So that would be a lower daily close following that reversal would indicate that it's probably a good reversal. Might go down to the intraday data and say if we take out, depend on the pattern, intraday swing low, that would be a specific signal to get short. But the key is the dual time frame momentums with the weekly momentum bearish and the daily momentum making a bear reversal in the momentum with price not having exceeded the last high, well, that's just a very bearish sort of setup, a very bearish pattern. So you're able to get, in this case, get short. Very small capital exposure, very high probability that the trend will continue net bearish. Remember, what you learned today you can apply to any market in any time frame, and this was also just about 8 or 9 minutes of what was a 20-minute video that we produced for subscribers, going into a little bit more detail than we did today. Again, if you like what you learned, check us out at dynamictraders.com. There's a 1-month trial from just $19 available for first-time subscribers. Take care. Have a fantastic week.